Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, May 12th, 2023. Before we look at all the charts, I want to ask you to please click like if you haven't already. It helps us out a great deal in being found on YouTube when others search for Tesla analysis. Also, become a Wicked Stocks YouTube channel subscriber. You'll be provided notification each and every time new content has been uploaded. That includes the daily Tesla and daily Apple report and the occasional free stock pick. As far as stock picks go, we do two a week at wickedstocks.com. On Thursday, we put one out on Alphabet or Google. Also on Monday, Waste Management. You want to check those out. We also do daily analysis in the Triple Q, the SPY, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT. All of that for $47 a month. If you subscribe, you get a five-day free trial. So if you don't like what you see after 3, 4, 5 days, you can cancel your subscription with no cost. So there's that. Check out wickedstocks.com. Anyway, I'm going to show this chart just to remind you that 196.25 channel top is expected. It has been expected since we tested the channel bottom, a few weeks ago. A couple of weeks ago, almost 3 weeks ago, now at 149.78. That 149.78 channel bottom was considered a 2 to 3 week target. 2 to 3 weeks prior to that, when we had a meaningful sell signal violating both the speed line and channel bottom, that goes back to early April. We came off the channel bottom. Once we tested the 149.78 channel bottom, I've been mentioning how the upper 190s remain a 1 to 2 month target. And just a few days ago, about a week ago actually, we settled above a descending 1/3 speed line that is presently at 164.13. And that set up a 2 to 3 week buy signal to 198.26. So we're a full week into the 2 to 3 weeks. It might take longer. 164.13, nonetheless, a base of near-term support that can absorb selling through next week, and above which I'll say 185.01 in reach by the end of next week. And over the next couple of weeks, 198.26, which on the weekly chart is 196 and a quarter, and that's the number that I'll be using. Now for the day itself, I've got a number of charts to show you. We have 168.45 is the 2-week rising channel bottom. It performed pretty well on Thursday in containing daily selling pressures, and it could contain selling all the way into next week. 168.45, decent day support. This is for day traders and perhaps 3 to 5 day swing traders, because above which bullish momentum remains intact as we move into next week. Upside today, I've got, do I show that? Yes, 174.66. Very simple horizontal channel structure. That is our intermediate resistance for the day. Intraday, able to contain initial buying pressures. And, once tested, we could fall back to 168.45 intraday. We could trade inside the 168.45 to 174.66 level for a good part of the day. If we break 168.45, it's a bit of a head scratcher because it's difficult for me to say that I absolutely expect 164.13 because we also have an intermediate channel bottom over the last 4 days at 166.91. So, this is one of those subjective things where you just sort of play it. If you're an aggressive trader, aggressive day trader, and you're looking to go long, 168.45 is your spot. Do you bail below 168.45 and play, maybe even play the short side down to 164.13? That is the question, really. Because I think if we break 168.45, yes, 166.91. If we break 166.91, yes, 164.13. It's just kind of the way it's playing out right now. You can make a case that if we break 168.45, 164.13 in reach today. But I don't want you to ignore 166.91. If grabbing a couple of points is worth it to you, if you're an aggressive day trader, you could, sell the break below 168.45 and take profits at 166.91. Even day traders could consider buying 166.91 outright for upward retracement then for part of the day. So I'm going to leave that concept alone for now. I think I've milked it enough. But what I will say is that if we do close today back below 164.13, we should by the end of next week, retest this 149.78 channel bottom, which is part of a range down to 146.06, a 5/8 downside Fibonacci from the January low against the February high. This zone, 4-star support, it's been 4-star support all along, able to absorb selling through June. Once tested, we can rally back up again into the mid 190s. I say mid because that 198.25 is on the weekly chart 196.25. And, I could go on and on about how bearish it would be if we close below 146.06. If you've been watching the Tesla report, what I would expect. And I will say right now that it would be a return to those January 101.80 lows, 101.81 lows within a couple of months of closing below 146.06. But we're a long way from that. We've tested the channel bottom. The channel top is calling the market, and I think it is likely to succeed. Having closed above 164.13 about a week ago sort of underscores that possibility. Let's talk upside today. I need to talk about that just a bit. We've got 160, that's not upside. Upside, yes, 174.66. So, this market is bullish, and I should cover that properly. If we push through 174.66, first of all, it would be consistent with the overall bullish dynamic that I'm expecting. And if so, 179.57 in reach. So pushing or opening today above 174.66, 179.57 is likely, where we could place a daily high. 176.11 is a minor point. It is actually this low here prior to the big gap. So it's bound to give the market trouble on the first attempt or two. But really, pushing or opening above 174.66, expect 179.57 where a daily high can be made. And of course, if we close above 179.57, we should on Monday test the 185.01 50% upside retracement. In fact, there's a part of me, and I thought about this for a moment, I'm going to leave it alone right now, but I may shift early next week, that wants to call the 179.57 our 2-star resistance or our significant upward pivot point into next week. 185.01 is still there. A week or two ago, it was a meaningful and still is a meaningful resistance area. What am I saying here? If we close above the confines of this rising channel top at 179.57, that generally indicates a price acceleration to the upside. And so 185.01 may well be reduced as we move into early next week. If we close above 179.57, let me put it this way. If we close above 179.57 and you want to go long some more, if you have already, or if you haven't gone long and you're in the 3 to 5 day to 1 to 2 week time frame, if we close above 179.57, I think you can do so. Yes, we'll have some hesitation at 185.01 early next week, but I do think if we close above 179.57, that is our 1 to 2 at the most week objective for 198.26, a completed objective. That 196.12 channel top, able to contain buying through June into July, and we can fall off again from there. And even if we close above 196.25 over the next couple of weeks, we still have 217.70 to contend with it, which is a much more significant long-term price ceiling that may well contain buying through the rest of the year, and is the point for this market to get up and over to indicate not only a good annual low, but longer-term bullish continuation as we move into later year. And we're a long way from that right now. What to leave you with? 168.45, decent support for the day, and 179.57 is decent resistance. Both can contain session activity. Holding above, these are the inside intermediate points. So anyway, I hope I didn't muck that up too badly. So I'm going to leave it at that. I don't think there's anything else to say. I'm going to leave it at that for Friday's Tesla report. I'll be back Sunday afternoon with Monday's Tesla. You have a great weekend.